So we started this conversation, understanding what wealth inequalities is. How does it look like?
Yes.
What do the numbers say? Talking about wealth taxation and what it is and how we can use it for redistribution purposes.
Yes.
We've also tackled a little bit about the challenges facing the implementation of a successful wealth taxation. Now, what is the way forward? We've talked about all those problems. Now,
Yes.
what's the way forward? And my question is, what immediate reforms could Kenya adopt to ensure a wealth tax is fair, enforceable, and effective?
Absolutely, and thank you for that. And in our paper, we actually say Kenya cannot tax what it cannot see. So at this juncture, I don't think we can see the wealthy. We do on paper. Let me put it that way. On paper, we can see, but in terms of the perspectives, we can see, like,
Yeah.
Marianne, you definitely know your neighbor who has the latest Range Rover and who has the best mansion here in Kenya and living in the suburbs,
Yeah.
where there is very good fresh air. So in that regard, you definitely know these particular people who are wealthy, but on the side of the paper, we do not know. So in this context, what the first immediate reform then that I'd ask Kenya Revenue Service to put in place is the aspects of ensuring that they have a wealth database system. Because without this wealth database system, then we will just be shadow boxing in terms of, are we really even targeting this wealth, or are we not targeting this wealth?
Yeah.
So before we even think about even introducing a law, we should think about the enforcement, the things that should happen behind the scenes before that law is introduced. So let's make sure that our wealth database system is very clear. That's number one. Then number two, we can also see, the voluntary measures that I was talking about. Again, if we come from an authority perspective where we are telling the wealthy they have to pay, remember they have access to a lot of resources which can enable them to change their structure of wealth. And also they have access to, my very good colleagues, lawyers in the field, who can actually advise them ways and mechanisms of reducing their tax liability. And they also have the avenue of taking this particular wealth offshore. So in this context, we do not want to have capital flight. So we still also need to think about how can we speak to them in a very good way, the soft approach that we talk about in our paper, so that we also ensure that they are also buying in on this particular question of what is a wealth tax, and perhaps even write to us a paper that they are proud to pay more in that regard. Then third, we also need to think about our data protection systems, because when you're thinking about wealth tax enforcement, you'll definitely have to rely on data from third-party sources. So the Kenya Revenue Service will have to rely on data from banks, to also have to rely on data from companies, etc., in terms of trying to identify what a person owns. So in that regard, then the data protection mechanisms from KRS's perspective, should be updated and strengthened, and not come in some of the reforms that we have seen within the 2024 Finance Bill and the 2025 Finance Bill, where they are just absolving themselves from the Data Protection Act, but actually coming up with very good guidelines and very good policy measures that they are putting in place to ensure that they protect the data of the taxpayer. Because once I have that confidence, then I'll definitely know that my data will not be exposed to third parties. Then there's the aspect of having incremental wealth tax reforms. So, in terms of testing the waters and seeing what would happen. So for instance, when you talk about the capital gains tax, and when you track where it came from, capital gains tax, started over in the 90s and 80s, if I'm not wrong, and then it was removed, then came back in 2014 at 5%. There was a lot of struggles for it to get to 15%. But now, capital gains tax should a little bit be similar to what we have in terms of the corporate income tax, which is currently taxed at 30% if we are targeting the wealthy in this case. So we can actually put a threshold, because again, capital gains tax can involve the middle class, and we don't want the middle class to say they're being targeted in a wealth tax. So we can actually say, for certain transfers of property which pass a particular threshold, then their CGT can be at 30%. So in terms of having progressive rates of CGT depending on transaction, in that regard, would then be a good thing in terms of looking at the incremental wealth tax. Then lastly is for civil society and also citizens to come together and actually advocate for this wealth tax, and actually call for it, such that whenever we go for our submissions, whenever we are even having negotiations with government at an international level and also at a national level and regional level as well, it's important that we keep on talking about how this particular tax burden can be taken to the people who have the ability to actually pay more compared to, you know, just one part of the bracket having that particular burden. Yeah. So those are some of the immediate reforms. Then once you have implemented those ones, then I think we will do another podcast in terms of now how then should the structure be, how then should the design of this particular wealth tax be, and just to throw the spanner in the works, just to say that some of things that should be put in place include, you know, ensuring that we target the really, you know, high wealthy, not targeting, you know, the middle class, saying people with 500k. No, those ones are not rich people, or even 1 million. Those ones are not wealthy people. So let's go to 129 million and above. In that context, then thinking about minimal rates. Thinking about how the types of property that we'll also put in within the valuation of the net worth, and then also thinking about how we'll conduct the valuation in itself. So it's a complex conversation and a big conversation that will keep on unraveling even as we continue with this particular advocacy on matters to do with wealth taxation. But for now, let's build the enforcement mechanisms and try and ensure that once you have built that capacity, once you can be able to say that this is what Kenya's wealth is, then we can then go ahead and tax it in that regard.
Kenya cannot tax what it cannot see.
Yes.
That is deep. So, if Kenya succeeds in addressing the wealth inequality, will the picture that you had at the beginning change?
Yes.
How would Kenya look like, you know, in like 10 years?
It would change. It would change. And I think the picture would some sort of be, in as much as the informal settlements will be done away with, they would become better places with good infrastructure, with good access to water, with access to, you know, proper sanitation, with access to, you know, better health facilities. We would even see a big hospital just near that place which was previously an informal sector. And the divide would have been bridged in such a way that, in as much as, yes, there will be the wealthy and people from the disadvantaged backgrounds or from humble backgrounds, the inequality wouldn't be that deep in such a way that somebody would not access health, somebody would not access water or proper sanitation just because they do not come from the rich community. But now, as it stands, there's that inability to access. And because of that inability to access, we cannot have that perfect image that we're looking for. And since wealth taxation is one of the measures, what I'm just asking citizens and even the government and everyone listening to us is, why don't you give it a try and see whether in 10 years or in 20 years it can come to be something that will change the lives and the, you know, the communities in Kenya.
I think that's a Kenya that we would all want to see.
Absolutely.
So we are at the very end of our conversation. But what is the one thing you would like our listeners to take away from this conversation or to just reflect on? Just one thing.
In our latest blog article, I quoted Neil Armstrong, and there is one of his songs that I completely love. I remember when I used to do a lot of music classes, one time we studied that song, and it talks about a beautiful world. A beautiful world cannot be achieved with the inequality that we currently have. So for us to get to that beautiful world that we are talking about, wealth taxation is one of the measures that we can think about. And if then it helps us to get to that particular beautiful world, then why don't we try it? So let's try wealth taxation, because it's not a utopian idea, but it's one that can enable us get to Neil Armstrong's vision of a beautiful world. Thank you.
I agree with you. Let us continue having that conversation.
Yes.
Thank you so much for your time and for your expertise knowledge about wealth tax. I'm sure everyone listening to us they have learned something that they didn't know about wealth tax. You've also debunked some of the myths that we've had about wealth taxation. So thank you very much. You can access our website for more information about the paper on wealth taxation and other papers that we've done. And also, as we'll agree, some of the answers, they're not simple. It requires us to think, it requires enforcement, it requires all those things that Morakaru has talked about. But these are questions that are worth asking. So let us keep this conversation going. Hoping to have you again now
Yes.
when things have changed. But for now, thank you. That has been our time.